and has 50 years background in the area of Social Security, Medicare, private pensions, and related programs. And we'll go from the way I introduced this. So you go, Mr. Abakis, go ahead. Please proceed.
Thank you, Chairman Grassley, Ranking Member Sanders, for holding this hearing. Having spent the better part of 2 decades working on federal fiscal and retirement policy, I can say with confidence, Social Security's outlook is more dire than at any point in my professional life. For tens of millions of Americans, retirees, disabled workers, widows, and children who lost a parent, Social Security is the foundation of their financial lives. Protecting it is not an abstraction, it is an obligation. Let me highlight 5 points from my written testimony. Number 1, Social Security is heading for a fiscal cliff. According to the latest trustees report, Social Security's primary trust fund will be depleted in 2032. Unless Congress acts, every single beneficiary, current retirees included, will face an automatic 22% benefit cut. That reflects a program out of balance, only taking in about 3/4 of what it pays out. A 22% benefit cut means $10,600 less per year for a married couple of 2 average earners. It means $4,800 less per year for the average widow or widower. For millions of Americans, that is the difference between dignity and hardship. And the uncertainty alone is already costly. Tens of millions of workers cannot plan confidently for a retirement benefit that may not fully be there. Number 2, there is a hard truth that we need to be honest about. The significant majority of Social Security beneficiaries receive far more in lifetime benefits than they paid into the program in payroll taxes. That is not a criticism of beneficiaries. It is mathematically how the program has evolved. People are living longer than its architects anticipated, collecting benefits for more years than the contribution structure supports. Until we are willing to say that plainly, we cannot design honest solutions. Number 3, delay is making the problem worse and shifting the burden onto younger generations. A decade ago, the Bipartisan Policy Center's Retirement Commission showed that a balanced reform package of benefit and revenue changes could have achieved 75-year solvency and prevented trust fund depletion entirely. That window has closed. The same package today could no longer accomplish both. Every year Congress waits, the required changes grow larger, and the burden shifts further onto younger workers. Number 4, we will likely need a bridge, but it must be paired with real reform. We have passed the point at which benefit and revenue changes alone can prevent the 2032 depletion. The timeline is simply too short. Some form of bridging mechanism, temporary borrowing authority, or a limited general revenue transfer will likely be required. But it must carry strict guardrails and be paired with meaningful structural reform. Bridging without reforming is not a solution. It is a more expensive version of the current problem, financed at the expense of future taxpayers. Number 5, the solution must be bipartisan and it must be balanced. Senate rules require 60 votes. No party is likely to get there alone, and no party will absorb the full political cost of either tax increases or benefit adjustments in isolation. A durable solution requires both sides to share the risk, just like the 1983 reforms. Any solution must also protect the most vulnerable. Low-income workers, for whom Social Security is often their only meaningful source of retirement income, and surviving spouses who face sharp drops in income when a partner dies. I would also note that the U.S. senators elected this fall will, for the first time, be required to confront Social Security's insolvency during their term in office. That is a new political reality. Mr. Chairman, Ranking Member, Social Security's history is one of problems deferred. The longer Congress waits, the more disruptive the eventual fix will be. We cannot afford to hide behind pledges of no changes or proposals that address only one side of the ledger. Both paths lead to the same place, a benefit cliff that nobody claims to want, but everyone is marching toward. When both parties decide the cost of inaction exceeds the cost of action, a deal gets made. The American people are at that point. Congress needs to catch up. Thank you, and I look forward to your questions.
Thank you very much. Now, Ms. Melito.
Chairman Grassley, Ranking Member Sanders, and members of the committee, on behalf of the National Federation of Independent Business, I appreciate the opportunity to participate in today's hearing on the future of Social Security. For more than 80 years, NFIB has advocated for America's small and independent business owners in Washington, D.C. and all 50 state capitals. NFIB is nonprofit, nonpartisan, and member-driven. Since our founding in 1943, NFIB has been exclusively dedicated to small and independent businesses and remains so today. Small businesses have a supersized impact on the U.S. economy, as you well know. Over 34 million small businesses operate across the country. From 1995 to 2023, they generated 20.2 million net new jobs, surpassing the 12.8 million created by large businesses. Small businesses employ 49% of the American workforce, account for 99.9% of all U.S. businesses, and comprise 45.9% of the GDP. It is no exaggeration to say that for the American economy to succeed, small businesses must succeed. Over the past 18 months, Congress and the administration have delivered tax certainty and regulatory relief to small businesses. Notably, Congress passed H.R. 1, making the 20% small business deduction permanent. Additionally, the administration exempted U.S. businesses from the beneficial ownership information reporting requirement, eliminating a major compliance burden and saving small businesses over $128 billion in regulatory costs. Despite these major victories, small businesses continue to face many economic headwinds. Taxes, inflation, and labor costs remain the top challenges for small business owners. Uncertainty is the enemy of growth and investment, and it is high. Or, as one member recently shared, economic uncertainty is the biggest challenge, while another wrote, taxes are too high. Business seems to be getting harder and harder to make a profit. The message from small businesses to Congress is simple: do no economic harm. That message is especially relevant to today's hearing. Proposals such as the Social Security Expansion Act are often framed as affecting only millionaires and billionaires, but small businesses are not out of harm's way from these deceptively labeled proposals. For instance, a design to lift the current payroll tax cap and extend Social Security taxes to certain investment income would directly impact many small business owners. Small businesses often report on the owner's individual tax return because 85% of small businesses are pass-through entities, such as S-corps, sole proprietorships, and partnerships. These businesses would be subject to additional Social Security taxes under the proposal. Profits exceeding $250,000, which are now often reinvested in payroll, equipment, and business expansion, would face a new 12.4% surtax, even if owners do not withdraw that income personally. For these businesses, proposals like the Social Security Expansion Act represent not just a tax increase on the wealthy, but on the revenue that small business owners depend on to operate, to grow, and to expand their businesses. When pass-through businesses face higher tax rates, it leads to less investment in their most valuable asset, their workforce. Small businesses continue to face economic challenges. Congress can help mitigate these challenges by extending